All right. Good morning, everybody. It's Friday. Made it. Triple witching day. Finally get this done and over with. Careful with the flows today. They're going to be a little odd because you're going to be getting that volume. Generally when we see volume, we're thinking of actions being taken and that there's a bias or sentiment behind it. Triple witching, we're going to see a lot of that volume, nothing more than just I want to keep this position, and so I'm kicking the can down the road on how long the position has a life. That doesn't have any new bias to it, so it can be misleading with the flows. Markets are finally starting to digest a little bit of that enthusiasm, thinking through some of the implications of what we've heard from Powell, but it's not done yet, right? We had Powell get his say, but now we've got Bank of Canada and European Central Bank today both going to have input that they got something to say. So listening to them chip their teeth, we can see we could get a little violence there. And then later in the day, 2 o'clock, we've got Harker. So we shall see how that goes. It's going to be another one of those watch the clock days. There was some discussion about the JP Morgan collar and how close we are to the upper position. It's such a, and there's two sides of the fence on this, right? Maybe back in the day when things were a little slower, it meant more, and we could worry about connecting at those levels. I'd say if we stay near it, then it's absolutely possible. The levels are for the SPX 5670 and 5185. Those are the two that you really want to keep your eye on. The thing is, if we're not anywhere near it, then it isn't going to come into being, right? It's not like we're going to run back down there to get that taken care of. And we're at 57.13 at the close. So you're talking about dropping back down into 5,600 and then going all the way down to 5,670 for that. Excuse me, it's 57.50. I was way off. 57.50 is the collar. Well, that's above us. So that can add to the drive to the upside to reach it. And then the other half of that collar is 51. So obviously that's not an issue, right? That's way down here in Madlands. 57.50. So go ahead and put that on the chart for today. I'm not saying we're going to go there, just that if we start getting near it, we're very likely going to do it. Like yesterday, we got near that cog line on the SPX, 57.32. We were at 57.25, and it wasn't much of a stretch to think that we were going to just drive it a little bit more and get into that cog line. Well, I think it's the same thing. If we get above yesterday's high, we're probably going to go to that JP Morgan collar. That'd be a pretty safe bet there. VIX really hasn't picked up too much in the overnight at this point. It's worth keeping our eye on through the day today, though. All right, so everything's on track. Just another day at this point. We'll see how it starts to play out. The halfback from yesterday's RTH is what I have marked here. And you can see in the overnight, we got underneath it, and we've tried to get back above it over and over again. So the intraday halfback of yesterday is worth getting marked out right now. Just keep that. You don't have to keep all of these lines, but I would keep that one. Once you have that one marked, lay it out down to the lowest part of Globex so that you have the entire day marked, and then catch that halfback. It's 57.42. Because if we continue this move to the downside, that's next. The way I have it here, if you want to just catch a screenshot of that, of course, I'll be posting it anyways, but that'll get through each side, no matter which way we go, and it'll pretty much finish up the day for us. I'm not expecting this market to really break down or break out. I think holding the line into the weekend is about the best that we could hope for. And that would give them really good headlines. They'd be able to, hold their heads up. So I don't know. Let's, we shall see. Volume's at 72. It's a little lighter today than we've seen over the last few days. And you can see on that front contract, the one that expires today, it has 11,000, maybe 12,000 if we just round up. And that's it, right? There's nobody's left there except for the ones that are really dragging their feet. And you should definitely already be in the December contracts. The AM edition of Spot Gamma just came out yesterday. I did not get the AM shared at all till way late. Just got too much stuff. But check the chat. You should see it now for the AM edition. You can see we got near that call wall yesterday. See, I'm trying to pull that AM edition up, make sure there's no surprises here. $5,700 is the pivot on watch for them. And that new trace map that they've got looks really cool. I'm waiting to get my hands on that. Looks a little bit like an EKG. All right, yeah, no, they're just digging deeper into OpEx and giving some geeked out nerd material. Read it at your leisure. I don't see them calling out any significant bangers like yesterday. They gave some really key levels and insight on what would happen if we broke, A over B. So, okay, it's in there. You guys can read it when you get a chance. Otherwise, volatility trigger underneath this, zero gamma underneath this, put wall somewhere way down there, 54.63. Moving averages all underneath this, 10-day, 3-week, 10-week. So nothing but structure below. And the only thing we have overhead is our own high and the call wall. We are drifting lower towards the ADR, 57.37. If we get to 37, we might as well go to 32 cog line. And then we would be right back to this drawing here. So breaking 56.88 offers 83, then 77, 64, 39. drive me crazy. I got to log again. My numbers aren't right there. Oh well. We'll get those figured out later, or I'll redraw it here. Yesterday's intraday low has got its own structure though. So just keep that in mind rather than doing the whole thing by itself. And since we are closer to the lower ADR than we are the upper ADR, it's not hard to believe that we're going to, that if we're going to hit the ADR lines, we'll hit the lower one before we hit the upper one. Today's central pivot higher than yesterday's pivot. They're not touching at all. That's bullish. We opened above the pivot. That's also considered bullish, but we are moving towards it, and we hit those pivots, more than at least 80% of the time. So it makes sense that we're going to at least tag that 5750 level. Let's get through that and see what we go from there, which would still be fighting with yesterday's low. Starting to get that classic B shape. Just remember there isn't a B, right? We won't see it as two capital B's, but instead as D's, right? The profile down below. That's basically 5,700. So if we do break yesterday's RTH low, there's really nothing here to catch us until we get back down to our own point of control around that 5,700. Come on, Thinkorswim. You can do it. Ten-day, 30-minute volume profile. This is a mess. We've got structure all over the place, high volume zones. If we make another attempt at an upside move, we got all this volume back here. Any attempt to move to the downside likely takes us to this point of control, 5685. We were just talking about the other point of control at 5700. So that kind of the upper edge of this high volume zone. If we break this point of control down here, it's a steep drop down to 5550. I don't think either one of these two would do much to help us out. We don't have a VPOC from yesterday. It's going to think my lines got deleted again. We don't have one because as soon as we opened, we cut down through that zone. Now, it's two ways to look at it, and it's a user preference. I won't mark it because it's already been hit, but the books will tell you to carry all three of these lines forward into today's trading because they are very likely going to offer insight if we cross back through either one of those three lines. If you don't have enough levels and you want more, that'd be a good idea. Otherwise, yesterday is a classic P shape profile. And the point of control from yesterday up at the highs. And for today, major compression, although it is starting to widen out a little bit, and classic distribution. No changes between TPO and point of control either. TPO and volume profile at this point. So we did get outside the box this week, but we're back inside the box. We'll see if we can close outside the box or not. This is the current week that we've been dealing with, and we've got a glimpse of what next week will look like. Now, these distances are based on volatility and time. If the current week that we have had a 5-day week and next week has a 5-day week, then we know that time didn't change. That's important because we do have weeks that are, you know, four-day weeks, and then we've got a time change. But the only difference between last week or the week that we are in right now and next week is volatility. It's the only change because they're each a 5-day week. And so far we can look at the volume, the volatility, and we can see that there's almost no change between these two. We could argue that maybe next week's a little bit wider. There was a shadow up there. But this box isn't set in stone yet. And throughout the trading day today, depending on how the trading goes, we'll see this box expand even wider or maybe even contract. So at 4:15 today, once it is locked in place, then it will be like all of these lines back here that are locked in place and they don't move anymore. Throughout the day today, those lines are going to move, the ones that are showing next week. So for now, everything looks like the same amount of volatility that we had this week. There's no reason to sit there staring at these throughout the day. Just take a look at them near the end of the day, see if it has grown significantly wider or not. If you don't have Thinkorswim, you can just draw your own lines. Just do it after the close on Friday and before the open, probably by noon Sunday, right? Because once we start getting close to the 6 o'clock open on Sunday, these things will start moving again. So use the 0-day 7 days from now. So after the market closes tonight, come in and look at this level on whatever broker you have if you're not using Thinkorswim. You can see the plus and minus there. It's 92.50 right now. So you would just take 92.50, add it to our close price, and then take 92.50 and subtract it from our close price. That'll be next week's weekly expected move. We're looking good on the 10-day. It's a little extended, but not extreme. I'd say the market needs to digest this a little bit. We see that kind of digestion when we look back. Got plenty of examples of where it's just kind of hanging out. We are on the decline, which kind of helps a little bit on that digestion. It's not like we're making the run up now. We've already flipped over. And for the 10-week, 3.5% is just about as much as we want to get out of this thing. We've gotten more. We can see 4.5, 5, even 5.25, but 3.5 is about the sweet spot. And if we stretch this out a few more years, we can see that we've certainly been higher than that. But we don't want to get too much higher. We don't want to get too much farther away from the 10. And the way that this gets resolved is either a correction in price, meaning we turn around and we go back towards the 10, and or a correction in time where we sit put and the 10 moves up to us in time. Either way, we're getting near the point where a correction is possible. It doesn't owe us one at this point. We're not that far. So looking at things and asking, have we moved too far too fast? And does it owe us a pullback? Nope. It is worth noting the distance from the floor pivot, 4.5, 4.25. It's possible that we could come up, break that high and try to go higher. But the analogy that I use still fits here. The farther we get away from this pivot point, that weekly pivot, it's like a runner running up a hill, and we keep adding more weight on him. The farther up he goes, we just add more weight and run some more and we add more weight, run some more and we add more weight. So sure, I mean, we're not tripping him, knocking him down and pushing him off the cliff, but to continue forward is going to be harder and harder and harder the farther away we go, right? So same thing here. Can we break that 58 and continue to move in? Yes, to the upside, but it would take a significant amount of news, event, something, right? We'd need a catalyst, serious change in market sentiment, something. It won't make that move on its own. I was not talking to you. My Apple phone thought I was talking to it. Go away. Nike had news this morning that popped it up, and FedEx had news that dropped it down. Now, FedEx is a bellwether, so you want to know why it went down. And if it's just because of its disconnection with the U.S. Post Office, then fine, that's not really a big deal. But if their earnings announcement starts talking about a complete and serious, utter lack of customers and engagement, then that's a bellwether for the broader market. I haven't had a chance to check it yet, but FedEx and Walmart, as boring and sleepy as they may be, are two that you really want to keep an eye on and just pay particular attention to what they have to say during their earnings announcements. Use AI for that, by the way. There's no reason to, sit there and read the whole boring announcement. Yeah, I had a pretty good feeling it was negative, but I don't know what or why yet, other than the post office part of it. So looking at what's down this morning, SPY down 0.5%. The FANGs, semiconductors, not really much of a surprise at this point. Looking at things that are up, what's up? Gold miners, China ADRs. So the BABA, Baidu, JDD constituents. And most of those Mag 7 targets that I gave yesterday on Apple, Amazon, Google, Tesla, most of them hit. I think Microsoft got sleepy and didn't hit my targets, but the others got pretty darn close. Semis are back down to yesterday's Globex. If that structure doesn't hold, we're likely to see this take a good drop all the way back down into 232 again. And you can see it, it's just a really big bar, right? A bunch of trash. This needs to hold around that 237.5. We lose that, it'll start to get ugly. We could just say it's yesterday's RTH open. At least that's what it's showing as the open here on this candle. It's not necessarily lining up here, but we'll use it. That open right there. It's almost right on the 50, 237.5. It needs to keep that. Otherwise, if that breaks, we'll run it back to the anchored VWAP. It's 225. Nice move, right? 237 to 225. I'll take that. Qs are looking better than SPY this morning, although not much. Uranium got a nice pop to the upside. It's got a lot of trouble here with this 3-bar reversal. That kind of evening star. Get through 27 with conviction, and you can try to challenge that anchor to VWAP again. But I mean, uranium's just had a really hard time. It'd be nice if we start to see a rotation back into this space. You know, it's been digesting a really big move. If we kind of zoom out here, that's been a big move, and then a lot of digestion, and then another big move. So we'll see. It's got a lot of work to do. And then gold miners, silver, precious metals, they're all doing good. And then the China ADRs made it to the anchor to VWAP yesterday. That's a real surprise. We're not back to the top. We're above the half. So it's got the juice. It is moving in the right direction. We'll see if it can get it. 27 is a nice round number. After the significant moves that this thing has already made, wouldn't be surprised if it starts to digest this level and even fade back some into that 2650. It's still a negative space overall, right? You see where we come from. This has a lot of work to do before it's going to be, you know, something we'd put trust in and trades in again. Day trade, sure, we can always day trade. Baba's got the same bump. EDD's really not participating yet. JD also really not getting into it. And same with Baidu. So, well, like PDD and Baba doing all the heavy lifting. It's still junk, still trash. Not a good place to be focusing on. Utilities again. You know, this took a little bit of a pullback, but it was due. I mean, look at that thing, man. That looks like Apple the last time it went wild, right? That is a very beautiful run. Not a surprise that it got a little bit of digestion. So now you can run the half back on that latest leg and see that we're above the half. That's the spot that needs to hold. Today is not done yet. So this break above the half, that's not a confirmed break above the half until we close up there. Otherwise, as far as you know, this could be a wick, and we can close at the end of the day down here somewhere. You don't know. You don't know. Poor old bonds. I think the takeaway here is that we don't have the Mag 7. We don't have the glory sectors that would lead us to victory higher, right? The champion quarterbacks that can get it done. It's been a pretty big week. Would not be surprised at all if we just hold the line, go into the weekend so they can get their headlines and, you know, they say that they defeated and that they won. If we break outside of yesterday's RTH low, then it's game on and we'll start shorting this thing and run it down through the different levels. Everybody, be careful, be safe. Have a good weekend. I'll see y'all next week.